Hello guys, today I'll be teaching you the CA Interpart Accounts Module 3, Chapter 12, Departmental Accounts Problems. So, we'll be solving departmental account problems in a detailed manner. Before proceeding to this video, if you like what I'm doing, please click the red subscribe button and bell icon for more videos. Also, like, share my videos. For that, I will be grateful for you. First, we'll be seeing the first question. So first question is, goods are transferred from department P to department Q at a price 50% above the cost. If the closing stock of the department Q is 27,000, compute the amount of stock reserve. See, let it be any stock, it has to be valued at cost and not at the market price, or the profit should not be included here. So the profit included in the stock is called as a stock reserve. That is, when you're transferring, when you're transferring some of the products or some goods from one department, let's say A department to B department, you're transferring the stock at cost plus profit. So that profit, the part of profit, is called as a stock reserve. Okay, the profit alone is called as stock reserve here. So always you have to transfer the stock of one department to another department at the cost, and if the profit is included in this, you have to remove it off by the way of stock reserve. And now we'll see how to solve this question. Here they are asking us to find out the stock reserve. So what they have said is, the closing stock of department Q is 27,000, and from P to Q they have transferred it at 50% above the cost. So what they are saying is, if the cost is 100 rupees, let's assume, okay, assume if the cost is 100 rupees, the profit they have added is 50 rupees. So total price is 150 rupees. Yes or no? So at 150 rupees they have transferred 27,000 stock, value of stock, closing stock. So how to find out the profit of this? So just observe here, by giving 150 rupees you're getting 27,000. What is the profit here? 50 rupees. So for the price of 50 rupees, what is the value of this good? So cross multiply it, 27,000 into 50. We are taking the profit here. Why? Because we are calculating the stock reserve. So be careful in this. Here you have to take only profit. This is price, cost, market price. This is market price, and this will be the our profit. So divided by 150. There comes to 9,000, and this is called as the stock reserve. So that's all is the question. First, take the cost plus price. Cost plus price, the value of the inventory. Then divided that by the profit included in that. So, and if you cross multiply that, you will get the stock reserve and the amount of profit which is included in the stock. So now we'll go to second question, illustration 2. Z Limited has 3 departments and it submits the following information for the year ending 31st March 2011. Particulars A, B, C, total. They have given purchases units, then amount, purchase the total amount, sales units, selling price per unit, and closing stock. And they have asked us to prepare the departmental trading account of Z, assuming that that the rate of profit on sales is uniform in each case. So in each case, in the sense, profit on sale will be equal in department A, B, C. The rate of profit, that is percentage of profit, will be equal in all the cases. Now we'll solve this question. First of all, they have asked us to prepare the trading account. So we don't have the opening stock. They have given the closing stock only. Purchases we have, but they told that the profit should be same. So we have to find out the purchase price for each of the departments. Then, and with the purchase cost which we are calculating for each of the department, we'll multiply the cost closing stock units with those purchase price which we will find out, and we'll find out the closing stock. Chalo, I'll detailedly explain how to calculate this problem. First, we'll prepare the uniform profit for all these departments. Illustration 2. First, so this is working note, and you have to write it after the trading account, but just I'm writing it here. So working note, first we have to find out the profit ratio, uniform profit ratio, that is. So here the sales of departments. Department A is selling 6,120 units at rupees 40. Department B is selling 11,520 units at 45 rupees. Department C is selling 14,976 units at rupees 50. So it comes to 2,40,000, 5,40,000 and 7,20,000. And if we add this, we'll get 15 lakhs. So total selling price for the Z Limited is 15 lakhs. Now we'll deduct the purchase less purchase, so that we'll get the cost. So selling price minus purchase price will be the cost. So cost and the purchase value is 6 lakh. 15 minus 6 will be 9. So this is the sales minus cost. So this will be sales and this will be regarded as cost, will be the profit. Gross profit will be 9 lakhs. So we'll find out the sales rate, the profit ratio. So GP ratio is equal to gross profit divided by sales into 100. So the profit we got is 9 lakhs and the total sales is 15 lakhs into 100. So this comes to 60%. So profit that should be included in all the departments is 60% of their selling, 60% of their cost. Okay. So now by keeping this profit margin, we will find out the purchase price from the sales price. Working note number 2, calculation of purchase cost per unit. So you're having 3 departments, department A, department B and department C. Now, so the selling price per unit of department A is 40. They have given it in the question, and here it is 45 and it is 50. Now deduct. So we are going in the reverse method. So selling price less the profit at 60%. So 40, so 40 into 60%. 60% is 24. Next, 45 into 60% is 27. 50 into 60% is 30. So then we get the cost. 40 minus 24 is 16. 45 minus 45 minus 27 is 18. 50 minus 30 is 20. So this is the cost. So this cost is regarded as the purchase price. So they told that all the departments' profit should be uniform. So if it is kept like that, what will be our price? What will be our purchase price? Or what will be the cost? So we have found out the cost. This cost shall be used for the for finding out of the purchase of goods, then, and for valuing the closing stock or opening stock. Now we'll find out the purchases. Okay, purchased units. So how many units did we purchase for A is 6,000 units, and B is 12,000 units. For C it is 14,400 units. So multiply this, we'll get 16 into 6,000 is 96,000. 18 into 12 is 1,000. Next, 20 into 144 is 288000. So this is the purchase cost. So we have found out the purchase cost also. Now we have to find out the opening stock units. So calculation of working note number 3, calculation of opening stock units and their cost. So again we'll go by reverse method. Now sales in the units are for A, B, C. Here it is 6,120 units and 11,520 units. Here it is for 14,976 units. Here what you have to do, basically whatever, if it is a P&L, whatever comes in the credit side you should add, whatever comes in the debit side you should deduct. So sales is there. Now we also have the closing stock, so we'll add closing stock here. Closing stock. So what are the closing stock units? It is 600, 960 and 36 units. So it comes to 6,720. Here it is 12,480. Then 15,012. Okay. So deduct the purchase units. So purchase units is 6,000. It is here only, you can write just 6,000 units, 12,000 units and 14,400 units. So 720 units, 480 units and 612 units. So this is the opening stock. So we have found the opening stock, and now we will find out the opening stock value. So stock will be calculated at cost price only. So cost we have found out here. Cost per unit is 16, 18 and 20. So the cost per unit. Now cost of opening stock will be 720 into 720 into 16 will be 11,520. Next is 480 into 18 will be of 8,640, and 612 into 20 will be of 12,240. Yes. So we'll also value the closing stock at the cost only. Cost of closing stock will be, so the closing stock here is 600, 960 and 360. So 600 into 16 will be 9,600. Then closing stock is 960 into 18 is 17,280. Then is 36 into 20 is 720. So that's all. Now we'll prepare the trading account by using all this information. Z Limited departmental trading account, for the year ending 31st March 2011. So particulars: department A, B, C. Particulars: department A, B and C. So this will be debit and this will be credit. To opening stock, working note number, mention the working note number. So working note number 3, and the opening stock is 11,520, 8640, 12,240. Next is to purchases, working note number 2. So purchases is 96,000, 2,16,000, 2,88,000. By sales. So for sales you haven't done any of the working notes, so you have to work out here. So sales for A, it is 6,120 into 40. For B, it is 11,520 into 45. Of course you have done it in the working, you can just mention that, or you can do in this manner also. So C is 14,976 into 50. So for A it is 2,44,800, 5,18,400, and for C it is 7,48,800. Okay, sales is done. Now closing stock. By closing stock, so closing stock also we have did in the working note number 3 itself. So copy that. Closing stock is 9,600, 17,280 and 720. Okay, Now, so we'll find out the profit or loss for this. So we got profit here. First we'll add the highest highest side and make it a total here, so that it will be easy for our profit calculation. So credit side is more, so 2,54,400, 5,35,680, 7,49,520. So here same, you write it here or here also, 535 680 and 749 520. Now deduct these, you will get the GP. 2. Gross profit brought down, so that will be 1,46,880, then 3,11,040 and 4,49,280. That's all is this question. I hope you understood it, and I'll be posting the other videos, other series videos also. So that's all for today. So if you like my video, please like it, share it, and comment for other videos. If you need, please subscribe to my channel and click the bell icon for more videos. Thanks for watching.